our main focus is how to journalize them, okay, how to represent them on financial statements. So stock dividends, it decreases retained earnings just like cash dividends. Remember, when we issue cash dividends, we will be debiting retained earnings, crediting dividends payable, and later eventually crediting cash. So here, stock dividends at the same time also reduces retained earnings, but under the right side, we're not reducing cash, but we're giving stock instead. Okay, the right side will be common stock, and if the right side common stock, again, the issue price currently is different from par value, then there's also paid-in capital in excess of par. So it's almost the same entry as how we issue a regular stock to the public, except that now the stock is not collecting cash from the public, we're actually giving away as a gift to shareholders. So we're using up the company's own retained earnings to issue the stock. Okay, so stock dividend basically is just rearranging the stockholders' equity section, reducing retained earnings, increasing paid-in capital section. It's a gift to shareholders. So an example here, if let's say the company issues 10% of stock dividend, that means they're issuing 10% of what's out there, proportion to the stock that's outstanding. So meaning if currently there's 1,000 shares out there, if they're issuing 10% of stock dividend, that means they're issuing 10% of this. They're issuing an additional 100 shares. Okay, if there's total 1,100 shares out there, they're issuing 10%, they're issuing an additional 110 shares to shareholders. Okay, so the percentage is just percentages of the original outstanding shares. So after giving out stock dividend as a reward to shareholders, the number of shares issued is increased, total outstanding shares also is increased. So that's why earlier I was talking about it might likely reduce the market price for stock because there's more supplies out there. Okay, so this is just some of the background and theory to this, and then I'll go into the journal entries. Yes, 13. So 12, we talked about cash dividends. Here we're talking about stock dividends. Okay, both of them are rewards to shareholders. However, cash dividends, it reduces cash, which is asset. Stock dividend reduces retained earnings. Okay, we're in the company's perspective, we're not issuing the stock to collect cash from customer or from shareholders. We are issuing the stock using up our own retained earnings. So it's kind of just rearranging our own stockholders' equity. Overall, total equity is still the same. Okay, we're reducing our retained earnings and giving away common stock to shareholders.